Anyway, so I want to welcome everyone today to our Tuesday talk. This is going to be our newest project that we're doing on Tuesdays. We're going to have different professionals on each week. And this week, Ryan Rukosky was so gracious to start us off. And just to tell you a little bit about Ryan, he's a 10-year financial advisor and a business consultant. And he is also a third-generation financial planner. He has worked in different environments, from small to mid-sized to large corporations, as a sole owner, in partnerships, and as a hired contractor. And his experience encompasses business consulting, taxation, financial planning, strategic planning, accounting, investments, and insurance. So, wow, that's a mouthful, Ryan. You do a little bit of everything, it seems.
So, knowledge across the board for sure.
Yeah. Well, how did you get started in this field then?
I got started whenever I was actually about 13. I helped my mom and stepdad build a multi-million-dollar real estate company. Yeah. Whenever I was, kind of growing up and around my grandfather, who was the chief operating officer for two of the largest stock brokerage firms in Cleveland, Ohio, we would run through different tax returns, different stock prospectuses, and things like that. And then whenever I hit my early 20s, I just kind of realized that it was something that I wanted to do. Yeah, I did a few things here and there, but it just, more of hobbies than my main focus. Mm-hmm. So I thoroughly enjoy working with financials, and that's where my life kind of led me.
Cool. So why is finances and taxes and all of that so important? And obviously it excites you. So what is it that kind of gets you motivated with that?
Because everybody needs help, and financials are a very big part of all of our lives. And there is a lot of knowledge out there that is just not good knowledge at all, and very outdated. Mm-hmm. Whenever it comes to what we're currently dealing with now. For example, digital marketing wasn't even being taken into consideration, 15 years ago, 10 years ago. Right. And so knowing what those deductions are, being able to plan for that kind of thing is very, very important, and understanding how it all works. Because it's not like your typical grassroots marketing, wherever you're going from business to business, you've got mileage and this and that, pamphlets maybe you have to buy or have printed, whatever it might be. So it's a completely different scenario across the board. And so knowing exactly how to work with that particular scenario, which is exactly what your group is all about, is very important, and especially whenever it comes to having a home office and things like that.
Mm-hmm. Well, that's interesting that you talk about, things that aren't necessarily true. And that was one of the questions I want to ask you about is, there's a lot of myths out there about what you can and can't do being a business owner, and, what you can claim and what you can't claim. And if you work at home, how that changes things. So what are some common myths that, about taxes when it comes to small businesses or solopreneurs?
Well, what I kind of hear, is one thing, kind of a major thing for people that work from home is that if somebody claims a home office, their chance of getting audited automatically increases. Mm-hmm. That's not true at all. Okay. The IRS actually came out with the home office, probably about 9 years ago or so. Mm-hmm. And the reason why they came out with it was because more and more people were transitioning to 1099 employment, and more companies were moving their employees to 1099 as opposed to being a W-2 in an office. And not only that, but then shortly thereafter, they came out with the simplified method. So the IRS isn't going to feed into these different things just to try to catch us up. That's not what the IRS's job is. And so another, common thing that I hear from people as well, especially whenever it comes to the digital world, is how am I, like if I hire on a contractor, for example, I can't necessarily deduct their labor, right? Or if I am working from home, we'll go back to the home office thing because that's a major thing. What can I deduct as far as utilities go? Can I deduct my cell phone? Can I deduct internet and these kind of things? What about security? What all qualifies there? How do I fit? What is a home office? So, that's probably the main thing that I hear from folks that work from home is really based around home office expenses
Right.
and what all is involved there. But yeah, I mean, software, continuing education, all of these different things folks can take. If you have a website, you can deduct that, and the list really goes on and on and on, depending on what kind of scenario you're in.
Well, there's a question that actually come to mind whenever you were talking about that, because when I started my own business, several years ago, one of the things that someone had told me was, you have to be careful what you have in your office, because even though it's in your home, if there's anything in that office that could make someone feel like it's not a home office, then it can automatically be, negated. Like you can't claim it. Like if you have a dartboard hanging in your office, is that something that is going to automatically say, no, it's not a home office now?
No, basically the way that the IRS views it is that as long as you don't have like a spare bed in there,
Mm-hmm.
and you're kind of sharing it as like a second bedroom,
Mm-hmm.
then you're going to be totally okay.
Okay.
If you've got a dartboard in there, you've got like a mini golf thing, whatever, putting green, whatever it might be, a plastic basketball hoop over in the corner.
Right.
Who fucking cares, really?
Right.
Like it's, if you've got a desk and a computer and you've got a printer and things like that, maybe not even a printer,
Mm-hmm.
everything being so digital. But if you've got a desk in there and a computer in there and it's genuinely set up to be an office space, you're going to be totally okay.
Okay.
Now, as far as the regulations go, whenever the IRS is classifying an office, is that it needs to have a door on it and be separated from the rest of the house.
Mm-hmm.
That would constitute a legitimate home office.
Okay.
It can't be like a home office that is like over in the corner of the living room.
Right.
That doesn't really qualify for that.
Mm-hmm. Okay. Well, that's good to know. That's good to know.
That
Definitely.
was a great question, too.
Well, it's like I said, it was something that came up. I know
Yeah.
several years ago that someone had said, because I do throw darts, and I do have a dartboard in my office, and I've got one in my living room, in my garage, and that's just part of my life. But
Yep.
I'm like, how many people have that in their offices in an office building? So it shouldn't matter. But.
You could have two dartboards in there, and you and your buddy could be going back and forth for 30 minutes or an hour or whatever. You could consider that lunch break, right? Like
Exactly.
it's still a home office, So yeah, that's just a common faux pas that a lot of people have.
Mm-hmm. Right. Okay. So I know that a lot of people think about, separating everything out in their business. You've got personal checking and savings accounts, and you've got business accounts. And, so how do you keep track of like receipts? And, is it something that you have to keep track of receipts if you're paying for everything for your business out of your business account? Is that something
Now,
that you have
yeah, so that's a great question. And you bring up a great point, which is out of your business account. There are a lot of people, for example, that don't even have a business account
Mm-hmm.
and they're running everything off of their personal. You don't want to do that. That is something that we want to keep separate completely. One, for budgeting,
Mm-hmm.
right? So with you bringing up and saying, hey, somebody has a business account, you're already on the right track.
Mm-hmm.
For budgeting, you want to know what your actual expenses are, what's going on with this, what your actual income is. Maybe you're an entrepreneur,
Mm-hmm.
right? So you've got a W-2 income and you've also got a 1099 income. You want to know what that separation is so you can project and plan properly moving forward. And not only that, but you want to make it as clear as possible, right? Just in case something were to happen, or down the line you end up needing to hire a bookkeeper or whatever it might be, then if everything is kind of intertwined and tangled together, that's going to be very, very difficult to be able to separate that at a later date.
Okay. Well, I had a client of mine that actually had this very question come up because, I'm not a tax professional by any means, but I've worked in the business, in business for years, and I've done a lot of bookkeeping. And when she was setting up her business, one of the things that she asked me, she said, "Do I need to take an actual draw, or can I just pay for things out of my business account and just note it as being a personal expense?" I suggested that she took a draw, but yet her tax person told her not to.
It depends on what her kind of setup is, right?
Mm-hmm.
So if she's an S corp, she's got to pay herself. If she is an LLC, filing as a Schedule C, she does not have to pay herself anything,
Mm-hmm.
and she can just take that money out, basically based off of the retained earnings.
Mm-hmm.
So she doesn't have to necessarily calculate that, because on a Schedule C, it's going to end up coming down to being, retained earnings at the end of the day, which gets attributed to the taxpayer and or spouse.
Okay. So
So
really, in her case, then she really could live out of her, excuse me, out of her business account then, and just denote things that are personal expenses.
well, it's not that you necessarily want to live out of your business account, right?
Mm-hmm.
Like, you want to transfer the money over from your business account to your personal account,
Mm-hmm.
and kind of get used to that being, we'll say, consecutive if you can,
Okay.
right? And based off of kind of like the same amount, because as you're growing and growing and growing, maybe you're going to turn into an S corporation or an LLC that's filing as an S corp. And so whenever you hit that point, you're going to have to pay yourself at one point or another, because that's a requirement of being an S corp.
Right. Okay. It's
Now,
good.
you can kind of like get away with it in the first year, maybe the first 2 years,
Mm-hmm.
not paying yourself a W-2. But really, quote unquote, the rules are that if you're an S corp, you want to pay yourself a W-2.
Okay. So going back to keeping the receipts then, so do you actually have to keep receipts for everything, or is having the transactions that show up in your business account sufficient?
Yeah, sorry.
That's okay.
In the account is more than sufficient. You don't necessarily have to have receipts.
Okay.
And I even have clients that ask me all the time. They're like, "Hey, Ryan, do you want all of my receipts?" and blah, 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 blah. Hell no. Don't give me your receipts.
Right.
We have an organizer for a reason. The only reason why you need receipts is if you were to get audited by the IRS. And it really is just for verification. And more than half the time, you're not even going to want to use your receipts anyway, because they're on carbon paper. And which means that over time, the ink is going to end up drying anyway.
Mm-hmm.
And washing away, and you're going to end up with the carbon paper only, and you're going to look at that thing and go, "Damn, I don't even know what this was for."
Right.
So you're going to end up going back to your checking account or credit card or whatever it might be, because maybe somebody has a company credit card that they're using.
Mm-hmm.
So, like in the past, whenever audits have happened and things like that, we end up using checking accounts and things like that. If something were to happen, and by using that and having the right strategies and this and that, we were able to overcome any audit that happened in whatever organization that I was with.
Okay. All right. Cool. So, kind of talking about other expenses, deductibles, things like that. What about using public transportation or Lyfts and Ubers, going to your meetings or events? Those are obviously, I would think, tied to a business deduction, right?
Absolutely. Yep. If you are going from, a home office to a, event, if you're going from a home office to wherever you're meeting a client, whatever it might be, as long as it is business related, then you can take that deduction.
And that includes mileage as well, if you're driving your own car?
If you're driving your own vehicle, yep, then you can take mileage.
Okay. All right.
And so even say, like, for example, you're driving from your home office to a location in your own vehicle, right? But
Mhm.
then you hop on a plane. For one, you can take that mileage. You can take the plane trip as long as you're going to wherever you're going for business. And then whenever you're there, you take an Uber from the airport to the hotel to wherever your client is. All of that is tax deductible.
Okay. So, and that's a good segue then. If you're on a business trip, if you talk about business at any point during that trip, is that considered a deductible? I mean, a deduction is that trip, or is it only specific things during that trip that are deductible?
Yeah, technically, the way that the IRS reads, the code reads, is that it's only based on the amount of time in which you were doing business.
Okay.
So if you were only doing business one day out of 5 days that you were there, then only one day is going to be deductible. However, if you are down there and you talk business in multiple different ways, at least once a day with somebody, then that becomes tax deductible.
Okay. All right, that's good to know because I've actually had people say that at different trips. They're like, "Hey, let's talk about business for a little bit," and then they say, "Okay, that's a tax deduction." So that's good to know. That's good to know.
I mean, but it has to be documented, you
Right.
know what I mean? So, like, for example, if you have a conversation about business, you want to follow up and cover your tracks
Mm-hmm.
by sending an email, text messages, Facebook messages, something like that,
Mm-hmm.
like a game plan of some sort. You can't just sit there, for example, and have a conversation
Right.
and consider that to be tax deductible because if the IRS called you on it, and you don't have any verification, then they're going to end up winning that part of the audit.
Right. Okay. All right. All right then. So, we talked a little bit about the 1099 people that you bring in to work with you, or how do you claim those when it comes to doing your taxes? Because, I mean, obviously, to me, that's a business expense. Is there something that keeps you from being able to claim any of that or parts of it?
No, it's just how you kind of claim it.
Mm-hmm.
So if you have people that you're paying throughout the year and you pay them more than $600, you have to give them a 1099.
Mm-hmm.
And that 1099 has to be out before January 31st.
Mm-hmm.
Now, if you have multiple people that you work with throughout the year and you don't end up paying one of them over $600, you can write that off as day labor.
Oh,
You
okay.
don't have to issue them a 1099, but you can still write it off as a deduction.
Mm-hmm. Okay.
But it's really coming down to the $600 rule, for 1099s that you have to make sure you get that 1099 out. And if you don't, then you cannot take the deduction.
Okay. All
So
right.
you really want to keep track of who the person is, through a W-9, right?
Right.
You want to have the social security number, the name, blah 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 blah, all of that good stuff, the address, all of that. So you can issue the 1099 at the end of the year should you need to.
Okay. Yeah, that's good advice, definitely. So, what is your favorite part about what you do?
Building relationships and having fun. That's really the funnest part of what I do. Like, it really is because numbers to me are just numbers.
Hmm.
It is. It just comes very naturally. I've always been naturally talented whenever it comes to financials and putting things together. That is what my superpower
Hmm.
is making financials make sense. But so not that it's not fun, it's just I would like to create as many relationships as I can with people because whenever I am getting bogged down with paperwork, and I've got 25 tax returns to do in 5 days, then having people to talk to have that conversation and build that relationship with gives me my break.
Right.
Like, for example, I haven't even been asleep since yesterday. So I've been up for over 24 hours at this point, and I'm not really tired. You know,
Mm-hmm.
I have a lot of stored up energy, but I'm probably going to end up crashing later on tonight around midnight or so
Mm-hmm.
and sleeping for, 8 or 9 hours. But yeah, that's really the thing that I like to do the most. That's what I love the most, is genuinely building relationships.
Well, and you're great at that. I have to say, you're a very genuine person when you reach out to people and interact. I think that's one of the reasons why we got along so well, because it's just it's fun talking to you, and I think that's a really good thing. Yeah, exactly.
I appreciate it. It's fun talking to you too.
Well, good, good. Well, we did have a question that Steph Lagana had posted. She says, I'm a small business owner and I want to be diligent about my record keeping throughout the year. So, how do you recommend I track my expenses and maintain my records? Are there tools that you suggest using?
Um, well, it depends on what you want to use, right? Like, for example, a lot of bookkeepers or accountants will say use QuickBooks. But the thing is that QuickBooks probably isn't very user friendly
Right.
for a lot of people. So, what I typically suggest to folks is Zero,
Mm-hmm.
which is a lot more user friendly. It's actually cheaper than QuickBooks is as well. And you don't really have to have a degree to kind of navigate it
Exactly.
for years and years of experience. And then, as far as like maybe not even a professional software like that, I actually have a spreadsheet that is for businesses that folks can use on a month to month basis that is completely interactive, and the categories and subcategories are able to be changed. And so the different tabs interact with one another and make it very easy. And it's a much cheaper option
Mm-hmm.
than paying a month to month fee.
Right. Well, is that something that you could offer out to the people that are watching this if they reach out to you?
Absolutely.
Cool. That'd be
You
awesome.
can you can has it.
Good, good. That's wonderful. Thank you. Definitely. That's awesome. So, so you think then tracking the expenses that way, and then that's enough to maintain the records that you would need for your taxes.
Yeah. I mean, as long as your categories are accurate
Mm-hmm.
and you're keeping up with them, that seems to be the major problem with a lot of people in general, not even just business owners, but individuals, is that they get on a path. They do that path for like a week, maybe two,
Right.
maybe 2 days.
Yeah.
And then
Exactly.
then all of a sudden they're like, fuck this shit. Or they forget all about it.
Right.
And then all of a sudden they get down to the end of the year and they're trying to reconcile for the entire year
Mm-hmm.
while going into the next year and trying to make some money and create relationships and take care of their household and all of that. And then they're pulling their hair out or pulling their hat off and going, I'm crazy now, because they're trying to do it all at one time instead of breaking it up into segments. And that's the thing too, whenever you're breaking your business up into segments, is that you're really going to get to know your business on a very personal level and understand what you're doing and what you're not doing and what your business is doing for
Right.
accountability purposes. Because if you want to hold yourself accountable as a 1099 self-employed person, you know, then you have to know what your numbers are. Then you have to know what your margins are, and your ROI and different things like that, to where you can actually sit there and say, oh, well, I'm a legitimate profitable business right now, or nope, not so much this month.
Right. Right. Well,
And how to be able
sorry.
to
Go ahead.
plan for emergencies,
I'm sorry. Say that one more time.
and how to plan for emergencies
Right.
too.
Right. Well, what do you suggest that if someone's looking at trying not to have too much to have to pay at the end of the year in taxes, but yet they do want to save money to have money, for emergencies, to have that emergency fund. Kind of how do you walk that line where you're not killing yourself in taxes at the end of the year?
Well, I mean, it is kind of a line, right? Because you want to have retained earnings, but you want to be able to pay the least amount as possible. If you are self-employed and you're receiving a refund of some sort, then your personal situation probably has a whole lot of itemized deductions in it. Or you have a whole lot of expenses in your business, or your planning is really on point. It really comes down to one of those, kind of things, because I will tell you that I have been self-employed for the vast majority of my life, and Ryan doesn't get refunds.
Yeah.
I get nowhere near refunds. I get the exact opposite times 15 of refunds.
Mm-hmm.
And as your business is growing more and more, it's just coming up with the best strategies to be able to mitigate, but also be able to plan. Because if you're just basing your entire business around taxation all year, every year, then you're not really going to end up going very far at all. Mm-hmm. Because you're going to be taking into consideration, oh, well, I don't really want to make too much money because I'm going to have to pay more in taxes.
Why are you in business?
Yeah, right. And you're not going to have any retained earnings to roll over and use in the following years, and gaining and moving forward and this and that and all that cool stuff, being able to hire on employees or contractors or whatever it might be. Mm-hmm. So you want to mitigate it and be smart about it, but you don't want to base your entire scenario off of paying 20 grand in taxes plus or whatever.
Right.
As an example.
I've heard that you're supposed to keep out about 25% of your income to be able to pay your taxes at the end of the year. Is that correct?
Well, it kind of depends on what kind of structuring you are, and it also depends on what state you're in. Okay. For example, North Carolina is on a flat tax. So whatever we put into the federal side does not carry over to the state side. So the flat tax is automatically 5.5% no matter what. And then, you've also, like, for example, if a company is an LLC, they're going to have to pay the Social Security and Medicare tax. And so you've got that plus your regular tax bracket plus a flat tax of 5.5%. So with that being said, on average, somebody is going to end up being between 30 to 32% of what they would actually want to put back and save. But it really just depends on the structuring. And now we've got the whole Trump thing going on where all companies are going to be at 20% across the board, no matter what structuring they are. So then you've got 20% for the business alone, plus whatever tax bracket you are.
Okay.
Because, for example, if you're an S corp and you've got a K1 that's following over to your personal return, the K1 is pass-through type entity, right? Mm-hmm. Well, Trump kind of changed that as far as that goes. And then as far as LLC goes, we're at a different level with that as well.
So really in this instance, depending on whatever your situation is, I mean, it's always best to talk to someone like you because they're going to help you figure out what you need to do.
Hashtag facts.
There you go.
Hashtag facts.
So can you work in any state, or are you strictly only allowed to work in North Carolina where you're located?
Oh, no, we work with clients everywhere. We're all over the place. Mm-hmm. And even whenever it comes to working with like investments or insurance and things like that, I'm licensed in 15 different states.
Okay. And then what about people outside of the United States? Are you able to work with people doing those types of taxes? Or
it depends on where they're at. I don't get into Canadian returns, eh?
Okay.
And I try not. I don't really mess with anybody as far as expats unless they're in the Virgin Islands.
Okay.
I have worked with financials over in Europe some and over in the UK, in different ways, but mostly business consulting.
Mm-hmm.
So yeah, but I don't really go into, Mexico or Canada. Not that I can't. I just there's enough going on here
Sure.
to focus on what we need to fix because there's a lot of fake news out there whenever it comes to financial advice. And it's really come down to either one of two things: reverse engineering or creating a new path. Because a lot of what we've been taught and have had access to is completely fake news and is not really helping us.
Mm-hmm.
Because if it was helping us, then why are we considered as the mass affluent, the 98%?
All right. Okay. Well, it sounds like though, because most of the people here, obviously in the U.S., we do have one or two, I think, outside, but um, you do so many other things too. It's not just taxes. So obviously, like you talked about, doing the business consulting and things like that, you can help people elsewhere, which is great.
Facts.
Facts. Hashtag facts.
Hashtag facts.
Great. Well, I did have someone actually send me a private message. They didn't want to post anything, but they have been in business for themselves for about, I think it was a few years, and they haven't filed their taxes. So,
Okay.
what is it that they would have to do first? Because they said, can you go ahead and file this year, or do I have to go back and file from the beginning? And start from there and then move up. How does that work?
First of all, just start praying and pay the IRS everything. No, I'm just kidding. Don't do that. Wait, you want to go backwards to go forwards. So wherever you stopped paying taxes or preparing your tax returns, that's where you want to start. So if you have multiple years that you haven't filed, then you want to do that. And the reason why is because of carryovers, you know, and a few other variables as well. But if you go and file 2017 without filing from the past, there's a really good chance the IRS is going to go, oh, well,
Right.
it looks like we haven't filed for a couple years. Look at that.
Right.
And then all of a sudden they're going to go, oh, well, you haven't filed for 14, 15, and 16. So what are those? Whenever it comes to anything financial, everything is very circular. There's a beginning point and there's an ending point. It's not really a straight line.
Mm-hmm.
That circle can go kind of like this and whatever, but you have to close the circuit. And so by closing the circuit, you have to go back to go forwards to make sure that one, you're tracking everything that you need to track. For example, maybe you had student loans that you paid in the past and you have interest. Maybe you had mortgage. Maybe you had, other things that were intertwining with your business and personal life. And so that's why that really matters because at the end of the day, there's no real separation as a business owner between personal and business whenever it comes to planning and projections.
Mm-hmm. Okay. Good
So
news.
going backwards is not very difficult. I have software that goes all the way back to 2008.
Mm-hmm.
You have to file it differently. You can't e-file. You can't use current software for past returns. So you have to use that particular software for that year return because the rules are different, this, that, and the other. So you want to make sure you're using the proper software whenever you prepare that return. You and the professional that prepares the return, you're going to actually mail it in. And then, you can do them all at one time, but you want to do them in order.
Mm-hmm.
You don't want to skip around. You don't want to prepare 16 because you've got all of your shit and
Mm-hmm.
you don't know what happened to 2012.
Right.
Ryan, I don't know. We can get the transcripts, whatever we need to do to make sure that we are filing the income. Now, one thing, whenever you do get transcripts from the IRS, the only thing that is reported to the IRS is income. Because as a tax professional, the only thing that I have to have, that I have to keep track of for 7 years is income. So whenever a company files, that's all that they're filing.
Mm-hmm.
They're not going to have your mortgage statements. They're not going to have any property taxes that you paid in or whatever. They don't care about deductions because that's not what brings revenue into the government.
Right. Okay. Well, and that actually brings up another question too that I had. When you do file and you have all of these documents and tax receipts and all this kind of stuff, how long do you have to keep those? Some people say 10 years. Some people I've heard say 7 years. What exactly is the length of time that you should keep those records before you can destroy them?
I mean, really, I would keep them for, a minimum of 7, but I would keep them probably for 10 because the IRS is technically able to go back 10 years.
Okay. Good question. All right. Well, so see, are there any other questions? I don't see anything in our. Steph says, thank you for answering her question. Yeah. And hi, Christian. I'm glad you could join us. He's new to our group.
What's up, Christian?
Yeah, he's from, I think he's from Australia, actually.
Australia.
That's awesome. I think he's
down under.
Yeah, from down under. Yep. So, all right. Well, so what would you say, if there was any kind of like the biggest, I guess, tip or, advice that you could give to someone who is maybe starting a new business or, kind of venturing into this entrepreneurship world, what would be the biggest piece of advice when they start thinking about taxes? And
track your shit.
Track your shit, yeah.
Really, that is the number one thing that I can suggest because numbers don't lie, people do.
Mm-hmm.
And so whenever it comes down to your numbers, you can't lie to yourself. Mm-hmm. And you also are going to have the information that you need to be able to make your business thrive the best way that you possibly can. That's not just based around taxation, that's based around business consulting too. Mm-hmm. So know your numbers and how all of that coincides. And then whenever you're talking about planning and that kind of thing, don't be scared to reach out to a professional, who has the ability to lead you in the direction that you want to go into, which is ultimately success. Right. You want to be successful in your business. You want to get good results. And so you don't have to have all of the answers. You just have to know somebody who does.
Mm-hmm. Okay. So where can people find you?
You can find me right there on my Facebook page, Ryan Rukosky. Mm-hmm. You can find me on my website, oversightfinancial.com. You can find me on my business page, Oversight Financial, and you can also find me on my new public figure page that will be up and out soon, which is also Ryan Rukosky. Pretty much if you put in my last name, there's going to be like 3 people that pop up, and I'm going to be the cutest one. No, just kidding.
Of course. All right.
Just kidding.
Well, if you wouldn't mind, Ryan, after we get done here, if you wouldn't mind maybe popping some links into the comments of this live so people can find you if they want to reach out to you, that would be fantastic.
Yeah, I'm not a huge link dropper, but I'll do it for you, lady.
Well, I appreciate that. I do. That means the world. So we want to make sure that people can find you. And I really want to thank you so much for your time, Ryan, because it's been very, very informational, and I'm hoping that we'll have a lot of people who get some good information out of it as well. So
Thanks for
you all
having me.
definitely need to definitely go see and talk to Ryan if you have any questions about your business and taxes and all the stuff that he does, because he's absolutely awesome sauce, and we love him very much. So
Woo, woo.
yay.
Oh,
So what was it?
I
Sorry.
love you guys too.
Oh yeah, you're awesome. So and I just want to say too that you couldn't probably work with a more positive, upbeat person than Ryan. So he's fantastic. So next week we want to kind of get you all excited about this. We're going to have Amy Bernier on next week.
Woo,
Yes,
woo.
woo. Amy is getting ready to start her Say Yes to Amy tour. She's going to be traveling across the country, and she's got some amazing insight into getting your mind in the right place and saying yes to you and being good to yourself. And so I'm so excited to have her on here next week. I'll be posting an event for that, and I hope that everyone will tune into it, because she is just a absolutely fantastic person.
Yeah, mindset matters a lot.
Yes, your mindset definitely. And it determines what you're going to do with your life and how you move forward. And she is the queen of getting you in the right place. So
the queen of yes.
Exactly. So definitely look forward to that. Again, thanks to Ryan. Really appreciate your time today. And you all definitely take the time to reach out to him. He can help you. All right.